Hello, hello. This is Jabroga, and it's time to do some stock market analysis. Let me get my music going here. Alrighty, alrighty. Okay, so this is the stock market price. We got AMC right here. This is what we're gonna be talking about mainly. Right, we got the price up here, 240. You can see all the stuff I'm looking at down here. You can pause the stream and see all this stuff. But yeah, this is all the stuff I'm watching. Yeah, I might speak a little bit on GME, but AMC is mainly what I'm gonna be talking about today. Let's see, the fear and greed for the stock market, the greed 66. The fear for crypto is 30. Then you can pause it and see all these numbers if you want. This is the debt clock. So we're looking at that just in case. Okay, I think that covers everything for right now for the, just the basics of getting the stream started, right? Oh, I do want to say I don't know how long this stream is going to be. I do not plan for it to be long, but that is subject to change. So I don't know. Okay. Where do I start? Okay. Cuz I got some things that are pretty important to say. Right? Like, from what I can tell, I don't want to sound arrogant here. I really don't want to sound arrogant. But from what I can tell, I've been the only person on the internet that's been right about this stock. The only person on the internet that's right about this stock. Now, my reasons could be wrong, but the outcome has been right. And to me, that's all that matters. I'm consistently right on the outcomes. So you might not agree with my reasonings, but the conclusions are right. When the conclusion I'm talking about is the price. So as long as the price is right, pun intended, it doesn't matter what my reasons are. The price is right, and it's on a consistent basis. Okay, so we got this stock, right? Let's go back. Let's go back in time. Let's see how far back I gotta go. Right here. You see, this is in 2026, right? This is in 2026 April, right? The stock went down to $1. The stock went down to $1. Okay? I told you this ahead of time. I told you this a long time ago. It is scary how consistent I am with stocks. It really is. I told everybody a long time, way before it went to $1, that it's going to go to $1. I'm the only person on the internet that's saying this stuff. So look, I know I only got like 3 viewers that watch me, but you 3 viewers, if you listen to what I say, you have a great potential to potentially make money, a lot of money. Not financial advice, by the way, because in America, the land of the free, home of the brave, freedom of speech, quote unquote, if you say your opinion about stocks, oh, you can be sued. Where's the freedom of speech? Oh, I thought we can say whatever we want. No, you can't. Okay. And the proof is in the pudding, right? I'm gonna start the music. I'm gonna show y'all that I said the stock is going to $1. Right. All right. Let me start the music. So we're gonna start the music. We're gonna go here. Right. Okay. We're gonna go here, and we're gonna play what I said. Right. Okay. So let me make this bigger. Can I make this bigger? Okay. You can see this says no views, 0 views 2 years ago. 2 years ago, right? I get no views, but I'm right, bro. It doesn't matter about the views, because if I keep being right on stocks, I'm just gonna be a rich person with no views, right? So it doesn't matter. So let's play this and see what I say 2 years ago. Proven correct, right? Now you might not agree with the reasons, but what I said happened. All right, let's listen to this. Because like this is what's gonna happen in my opinion. Like if the system does not break, the criminals are just gonna get bolder and bolder. Like it's gonna get to the point where you see all these numbers down here, all these will be fake. Like every single one of these will be fake. And then this right here, this is already fake, right? Because it's being suppressed. So because everybody knows they're cheating. Once you get to a point that everybody knows they're cheating, it's time to grow for broke. So if cheating keep going on, it's gonna get worse and worse and worse. So all these numbers are not gonna make any sense. Yeah, all these are not gonna make any sense. And then if they get away with this part, once all these become fake, eventually they would just change this number. They'll be like, oh, it's a 5. You'll wake up, and then it'll be a 1 for no reason because they said it was. Okay. So now back to AMC. We woke up one day and it was a 1. It was $1. I told you it was going to be $1. And see, this is the thing. Not only did I tell you it was going to be $1, I said it multiple times, at least twice. Now, I might have said it more than twice, but I said at least twice. That was just the one I could find. Yeah, that was just the one I could find. So I said the stock was going to go to $1 multiple times, way before it got to $1. Now, I didn't give a timeline for that. I did give a potential timeline for the short squeeze, right? And I said the short squeeze could potentially happen in 2026. What year is this? This is 2026. And you be like, oh, it hasn't happened yet, Jabroka. Well, guess what? 2026 is not over yet. Yeah. And guess what else I said? I said for the potential squeeze, it will be because of the real estate crisis in New York. Now, I did not know about the bond market and the Japanese yen. I did not know about all that stuff. I just seen a bunch of debt coming due in the real estate market in 2026, and I knew that it cannot be covered. And this is gonna affect houses prices. Like, okay. And the reason I came to that conclusion, because I was like, what can possibly break the market? Because it got to break the market, right? If the market don't break, it might not squeeze. Look, I always said this. The market has to break, in my opinion, for the squeeze to happen. Now, I hope that's not the case. I hope it can just squeeze without the market breaking. But it looked like it has to break before the AMC and GME squeeze, right? So that's what I always said. So my reasoning for what could possibly cause a break is the real estate crisis. It's commercial real estate, by the way. In 2026, when the debts come due, and I believe that's this fall. Yeah. So the debts are coming. It is coming. And we got a lot of stuff happening this year. You know, and in the fall, usually stocks drop in the first place. We got an election also, and if the stock market is being propped up for the midterm elections, they're not going to have to prop it up after the midterm elections. So there's another reason, like if it's being propped up artificially, they don't have to prop it up no more. So there's another reason for it to fall. Like all these stars are aligning, right? Now, this is just possibilities, right? It's not for certain. This is not like 100% guarantee. But the possibility is ever increasing. It's going up and up and up and up and up to a possible short squeeze, right? Yeah, so I've told everybody what I think the timeline is for the squeeze. Like, it could be a delay, right? Because the housing market has like a 6-month delay. So it might be in 2027, go sue me. But, you know, in general, on the timeline as a whole, if you're holding, then unless you sell, it's still relatively close, right? Because, you know, there's a gap between the housing market. But, you know, I'm sticking to my point of 2026. I'm not trying to move the goalposts, right? I'm not trying to do that. I'm just saying if it's relatively close, look, I'm the only person that came close. That's just what it is. Yeah, because everybody else, they say it could happen, but I gave a date and I gave a reason. Like, most people don't do this and be correct, okay? So this haven't happened yet, so I'm not saying this is correct. But it's trending that way. It's trending that way, in my opinion. So, I could be wrong, though. It's okay. I've been wrong before. But, you know, I wasn't wrong back here when I said this was going to $1. I'm just saying. And I haven't been wrong multiple times. I've been on stock, and I've been on, not stock. I've been on stream. Excuse me. I've been on stream, and I've said in real time where AMC is going. And it went. And I did this with multiple stocks. Like I called a rally for a stock in real time. Like I said this is going to rally, and it happened an hour later on stream. Like I've did this multiple times, okay? So it's not like I don't know what I'm talking about. My prediction rate is high on the success end, right? And I did this on stream. You can just go back and watch the streams yourself, and you can see it. Yeah, so like that's not brag, it's just fact. You can just go back and watch the streams. I predict stuff and it happens. I don't know why my predictions are so high. Maybe I'm a genius. I don't think I am, but maybe I am. But I'm just saying, it happens. And I got some more clues that I am looking at. Okay? You see this black line right here? This is the 200 moving average, right? AMC is at 240, right? So we're right here. Unfortunately, what I think they're going to do, because they're cheating, and the natural way stocks work is they always come back to the 200. This should not be going down to the 200 because it's artificially repressed. But I think now that this is going to go down to the 200. So short term, if you want to know where a place to jump in at, I'm looking for this to go down to 170, 180 or close to it. Like now, it's going to happen over time, so this line might go up a little bit, right? But that's what I'm expecting because they're cheating. They want to press it down as much as possible. Yeah, the powers that be want to suppress this stock, right? So they want to push it down as much as possible. And you got the algorithm that naturally gravitates towards the 200. So you got a natural force and you got an artificial force that want to push this stock down. So it's probably going to go here. In my humble opinion, right? Unless it squeeze, it could squeeze first. This is not talking about the squeeze, right? This is talking about like a short term play. If you're looking for a chance to put some money in, this is probably the area to do it, in my opinion. Or even better, under it, right? So, best case scenario, I think, would probably be right here. I don't know if it's gonna go that far, but you know, right here, this would be a good entry point, in my opinion. Right? And also, even more importantly, way more importantly, look at the 200 line, right? When it goes above the 200, this is just how the stock market works. They teach this in fundamentals. When it goes above the 200, usually long-term investors invest, and it goes up. Like you see, it goes up. When it's above the 200, it goes up. When it's below the 200, it goes down, right? So below 200, go down, right? Below 200, went down. Okay. So if you're looking for a point to go up and a point to buy and a point to sell, you can kind of like there are exceptions, right? But generally speaking, you can just kind of buy based on the 200, right? That's a very, very general statement. That's not a absolute rule. But you can notice below the 200, we go down. Above the 200, we go up. And this rule, you can keep seeing it. See, above the 200, you go up. Below the 200, you go down. See, it's just a rule. Below the 200, you see way back here. Below the 200, down. Yeah, it's just a rule, okay? Okay, so we zoom out. And this is what I want to talk about. You see this black line? Right now, this black line is at $14. The 200, right? The 200 is at $14 the current day. Way back here. Okay, this is where the meat at. Everybody need to listen now, bro. Listen up real hard. Okay. Way back here. This line about 121, you know, this is just a rough estimate, right? About 121, this is where the squeeze happened, right? Okay. Right here is a baseline, right? So we got our base right here pretty much, because you got resistance. I mean, you got support right here and you got resistance right here. So we got a baseline right here. Like and this is around like $74. Okay, so $74 is our base, and 122 is around where the short squeeze happened. All right, let's do a little bit of math. Like let's see. Give me 1 second. Was it 70? Hold on. Because I forgot the numbers I was looking at. Maybe it was 71, right? Because I forgot the numbers I was looking at. Because, you know, this is a rough estimate, right? So, hold on. Let me get my numbers right. Yeah, just give me a moment. Yeah, well, this got to be close enough, because I'm not getting the exact number. I should have looked at the numbers I picked the first time, because I looked at this offline, right? So Okay, okay, okay. I just have to give a rough estimate because I don't remember the exact numbers I picked, right? But it's close. It would have been better if I could have had the exact numbers, but that's what I get for looking at this offline, right? But anyway, around here is around 70. So around $77, right? And around here is around 116. I think I picked one. I know that I remember this number. I picked 122 when I was looking at it. So 77. So 77 divided by 122. That's still not close enough, bro. I think it might have been 74. Maybe 71. We're doing this in real time. We'll figure out. This is close because I had got this. Okay. The number I was at was around 71 when I looked at it the first time because I got to get my numbers right. I should have wrote down my numbers when I was looking at it because like I'm just kind of eyeballing it, right? So it's hard to eyeball this exact same pinpoint every time. But where I eyeballed it at, it was around 71 and 122, right? Okay. So when you divide 71 by 122, you get 58. So that 58 is I'm looking at it as a percentage, like it's 58% of the way to a squeeze, right? So when you take them two numbers, that's the percentage away from the squeeze you are, and also it's combined with the fact that you're over the 200, right? Okay. This is where it get interesting at. So, 71 divided by 122, 58. And at that point, when it went from 58 to 100 and it was above the 200, there was a squeeze, right? This is just data, right? This is just data. So when it went from 58 to 100 and it was above the 200, that we had a squeeze. So I'm just looking at what happened when the squeeze happened, right? Okay, now come back over here. This is where we at, right? We're at $2, right? And the 200 is at 14. So if we go by past information, at what point would the squeeze begin? And look. Guess what? When you divide 8 by 14, you get 57. Yeah, when you so at $8, the line's at 14. That's like the math is looking like it's close, right? So at $8 and the line is 14, at least from history, it looked like when it just jumped. That was the point it jumped. Yeah, I'm just looking at the numbers. This is not like a law. This does not have to happen again, but it happened before. So I'm just saying, if it happened before, it's possible that it can happen again. So since it happened before, that's my baseline. So the baseline for the squeeze happening is probably $8. Oh, and get this. I think it was Roaring Kitty's brother. I don't think it was Roaring Kitty, right? Because ever since the government been on him, he ain't been speaking, right? But his brother was talking about AMC. And guess what he said? He said that he think the stock could rally to, guess what number? $8. Now, I did not base anything on what he said. How he came to this conclusion is probably, most likely, completely different from the way I did it, right? Because they're looking at the Japanese bond market. I ain't looking at none of that. I was looking at commercial real estate, and I just seen this today, right? So, I think it's very coincidental that he also said the $8 number, and I don't listen to anything he say or Rory Kitty. Like I don't listen to what they're saying, and I came to the same conclusion that possibly the squeeze could start at $8. So you got two independent sources, right? They're saying the $8 mark is suspicious. The $8 mark is suspicious because I get around now. Like when I did the math before, I actually got 57 both times, but I just eyeballed it, right? I got 58 this time, like because I remembered that 122, but I did not remember where I put this right here. I should have did this on stream, right? So I don't remember where I put this line at. But anyway, this is very close, right? Like because I'm eyeballing it, so you know it can be off a few percentage points, right? But basically speaking, because that 58% mark, when that gap was filled, the squeeze happened and it was above the 200. At the $8 mark, it'll be 58%. The gap would be filled and it'll be above the 200. So it looks like the setup for that, at least according to the previous history, is on track, right? Once again, this is not a law. This is not set in stone. I'm just saying this is what happened before. So it's possible it can happen again, right? But if I was a betting man, and I am a betting man, I am in the stock market, the $8 mark is very, very suspicious. The $8 mark is very, very suspicious. So not only do I have a timeline for when the stock could squeeze, right? I think it's going to be sometime in 2026. I could be wrong, but you know that's what I just said. Like 2 years ago. Yeah, I think the stock could squeeze in 2026 because of commercial real estate, and I also think a high point of interest. A very high point of interest is $8. I was trying to get this on $8, but whatever. Yeah, a very, very high point of interest is $8, and that's basically all I had for right now. That took longer than I expected to explain it because I had to play with the numbers because I was eyeballing this, right? I was trying to eyeball, but the numbers are going to vary a little bit. It's basically this baseline with this baseline, right? And the difference between them two. The difference between these two baselines is very similar between the difference between these two baselines when you get to $8, right? Yeah, and then see, this is another thing. This black line, I'm glad I thought about this. This black line is ever changing, right? So this is going to change over time. So you don't look at the $8 baseline. You look at the difference, the 58% gap. Like that 58% gap is what you look at, not $8. So because this is going down. So if it goes down to like 13, it'll be 58% of the way to 13. All right, and if it goes down to 12, it'll be 58% to the $12 mark. If it goes up, well, the line's not gonna go up. It's like the stock line, like the price is below the 200, so it's not going up, right, until it surpasses it, right? But as long as it's below the 200. The squeeze is in a very good place if we get to 58% between the 200, the long-term 200 and the stock price, right? Like that's when things get scary for the hedge funds, in my opinion. So that's just my opinion. That's when things get really, really scary for the hedge funds, right? So yeah, we did the math to show what my reasoning was. My reasoning, once again, it could be incorrect, but a lot of times, even though my reasoning probably people don't agree with, the outcome, it just come to pass. Multiple times, right? So I'm not saying look at my reasoning. I'm saying look at my outcomes, because my outcomes are proven on stream. Like, you can say the reason is trash, right? Like, it don't make no sense. What you saying is a lie, whatever. But the outcomes cannot be denied. Yeah, the outcomes cannot be denied. Now, my reasoning is just to explain where I got that from. So somebody gonna be like, how'd you pull this 58% out of your booty pipe? Well, I told you how I pulled it out. You might not agree with it, but I do have a reason for the number. So, and more importantly than the reason, the outcome is what everybody care about. Because the outcome means profit. And profit is what we want. Profit is good. Profit is what we are in the stock market for. So, yeah, that's pretty much it. Yeah, this has been really the first stream that I've talked the whole 30 minutes, right? Well, I guess there was a little bit of dead space because of I was trying to get the math right? Because I eyeballed the numbers, so there was a little bit of dead space right there. But yeah, that's all I have to say for AMC, at least right now. So I told you my reason for the squeeze. I told you a trigger point, which right at the current moment is $8, but a more accurate description is not $8. It's 58% to the 200 line. So once you get 58% of the way to the 200 line, I think that's when we start seeing some fireworks, right? Okay, now going over to GME. I think that's all I want to say for AMC, right? And then this is the only other thing I'm gonna talk about, and then I'm gonna get off. Let's go back to. All right, for GME, gonna be very short. Like GME, they did some kind of like dilution or something. I might not be saying the right word, but they did something that the stock and the investors didn't like short term, so it dropped. So basically, they did something investors didn't like, so it dropped, right? I think this is a good entry point, in my opinion. That's just my opinion. I think it's a good entry point. Oh, and I didn't even look at this, right? We got support here, roughly. So it drops here, drops here, drops here, also drops here, and when it drops, it comes back up. So I think this is a good entry point, not financial advice, because if you tell somebody your opinion, it's against the law in America, even though we're supposed to have free speech. They be like, oh, you lied to me. I was controlled by your voice. Your voice made me go and buy the stock. I have no autonomy. I have no reasoning in my head. I was forced to buy it because you said so. Nobody told me that I was God. Like, I didn't know I was God. Okay, since I'm God and I can control what everybody do and they can sue me, give me $1 million. And if you try to sue me, give me $1 billion after that. Okay, since I control you with my words. So stupid, man. So stupid how evil these people is. It's evil, 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 bro. Have to deal with evil all the time. But anyway. But yeah, so I got more of a solid reasoning. Like, cause when I looked at this originally, where were we at? Okay, this was just a gut feeling. I'm be honest, this was just a gut feeling. I was like, this is the entry point. But now, behind my gut feeling, we got a little bit of data behind it. Like, right? We got a little bit of a little bit of reasoning, and not just like I feel like we got a baseline here, right? So yeah, I feel like that's a good entry point. And realistically speaking, where I think it's going to go to, if the squeeze doesn't happen, it's probably going to go up to right here. Yeah, so around, well, 25 a little bit too high, in my opinion. I think more around 23. Yeah, I think a little bit around here, because this is the danger zone. Right here's the danger zone. They don't really want to get in this high. So maybe like 23, 24, right? That's not in the danger zone for the hedge funds. Yeah, the hedge funds, they don't like when you get up this high. So yeah, around 23, probably a safe estimate where I think it's gonna go to, excluding any potential squeeze, right? This is assuming the squeeze doesn't happen before we reach this point, right? So if the squeeze don't happen, 23 will probably be around where this go to, in my opinion. So yeah, we can come back later and we can see if my predictions were right or not. So I'm not gonna say, well, I'm not gonna say that, but we'll just see. We'll just see what happens. I gave you my reasoning for what I think was gonna happen. So the fun part is waiting to see what happens. The waiting is not the fun part, but the seeing what happens is the fun part. So yeah. Before I end the stream, I'm thinking about if I should start streaming stock market more. I just got caught up, because I was playing Marvel a lot, and now since I'm not playing Marvel so much, I might do streams more. Because it's not like, look, I'm always looking at the stock market, right? Like, so even if I'm not streaming, I'm still looking at the stock market. I'm just not talking about it and telling everybody, right? So just for the sake of content, I might start streaming the stock market a lot more often, because like for content I was doing Marvel versus Capcom 3, and since Capcom wanted to be stupid, we're not gonna mess with Marvel versus Capcom 3 anymore, at least not now. If I feel it's safe to go back, I'll start playing the game more again. But right now I don't feel it's safe, and that's demoralizing. I was like, okay, let's have a full reset. Let's just step back. I didn't even play the game. The whole time I was gone, like I just played the game like any video game, like yesterday. Like since I was gone, I might have played Marvel once or twice, but that was because of outside reasons like boredom. Like I literally had nothing else to do. But like for the purpose of just playing it, not to be bored, I just played the game for a long extended period of time yesterday. And I didn't even play Marvel. I played Final Fantasy Tactics. Yeah, but really that long break, that's the first time I took a break that long without playing any video games, right? I just got tired of it. I was like, whatever, screw it, right? So we took a break, we came back, I am refreshed. So that's the first time in my entire life that I haven't played video games. So, that's what it is, because, these video games companies, they keep acting dumb. But, I'm here to talk about stocks now. I don't want to go too far off track, right? So let's get back on track. I got sidetracked. But anyway, back to the stock market. That's pretty much all I have to say about GME and AMC. I don't have anything else to say about these other ones. About USAS. It's at $5 now. When I said this on stream, when I said this is my dark horse, right? USAS stock. It was now it did reverse split, but it did go up, right? So I wanna keep that in mind when I tell people this. Like it was at 50 cents, right? So it was at 50 cents and it went up to $1. They reverse split, but overall it has been up. Like I had to look at the timeline. I don't see since they changed the. Eyeballing it, I think it's just around here. This is the rough eyeball estimation. So pretty much the stock doubled because it was like they reverse split it, right? So that is what that is. But it still went up. So you kind of doubled your money. Or no. I think it was 4 times. It was 4 times. It's between double and 4 times your money. Anyway. Yeah, I don't have time to sit here and do all the math. Just know it went up. It went up since I told you. Now you can go back if you want to and look at the streams. I told you that the stock was going up at 50 cents, and I was looking at the stock at 25 cents. Right? But I didn't say that on stream, so I can't prove that because there's no stream evidence, right? But yeah, I've been watching the stock for a long time. I guess since this is gold and silver, I should talk about gold. Yeah, gold is a long-term investment, right? And this is what I think a lot of people don't notice. Like everybody knows, like gold goes up over time, right? Okay, yeah. So gold goes up over time because of inflation, right? And that's how our system is based on inflation, right? Or it might not even be because of inflation, but inflation sure don't help. I should say it that way. But anyway, gold goes up over time, right, in price, right? There are times that gold will drop. So there's times you want to be invested in gold if you're an investor, right? And there's time you want to be invested in cash. When the stock market crashes, gold is also going to go down with the stock market. Why is that? It's going to be temporary, right? Gold is going to go down because people, institutions, hedge funds, corporations, they all need liquidity. And they're not going to have liquidity, right? The ones that got bad debt and their zombie companies, all this kind of stuff, right? So to pay their bills, they're going to have to sell assets. And gold is an asset. Like, okay, so they're going to have to sell this, not this stock, but gold. They're going to have to sell gold when they become illiquid or crash, right? So they get margin called or whatever, right? The debts get too high. And a crash makes this happen all in a short period of time, right? So when a crash happens, people need liquidity. They're going to run and sell their assets, which is one of the assets of gold. So gold goes down. When the crash happens, you want to be in cash. People telling you not to be in cash are not accurate. You want to be in cash because gold will temporarily drop. For that temporary window, you want to buy into that window when gold temporarily drops, right? That is when you want to transition into gold because we know the crash is coming. So I said this 2 years ago. I've known really since 2022 that a crash is coming. So I've known since 2022. I've told everybody, at least on my YouTube, I told everybody 2 years ago that a crash is coming, right? So since you know a crash is coming, and the crash is not set in stone, we don't know the date. I've guessed the date. I made an educated guess, but that's not the word of God, right? There's no guarantee that's gonna happen. But we know the crash is coming, right? So since you know the crash is coming, you should have a lot of cash on hand. You want to store up in cash. Like the yearly net loss of inflation does not matter because gold is going to drop when the crash happened also. So You wanna have cash to buy that drop in gold, and then when the crash happens, and the gold is like leveled out, like everybody sold the assets, that's when you buy in, ideally, right? That's when you ideally buy in. And then gold would continue to do what it does, which is skyrocket over time, right? So that's when you see a crash coming, you wanna have cash to buy gold, right? And after the crash, you buy gold. So those are the times when you buy gold, and those are the times when you sell cash. When you see a crash coming, you saving cash, and after the crash, you buy the gold, right? So right now, you want to be in cash, in my opinion. And by cash, I mean the U.S. dollar, because that's the most trusted, right? Yeah. Now, the people that don't want to try to time the market, they should just be in gold the whole time, because over time, it just go up, right? It'll average out. So that's less risky for anybody that don't want to try to time it. And for people that say you cannot time the market, they are lying. They are lying. You can time the market. And a simple fact of this is this 200 line. Like, this is the bait. Look, the market always comes back to this 200. Look, and it doesn't matter. This is a completely different stock. Above the 200, it goes up. Below the 200, it goes down. This is generally speaking. So like you can, like for the law of averages, you can time the market just by the 200. Like, you can't time it. Look. It goes up. Under, it goes down. Like, I didn't draw this line, right? This is just what happens. So look, just by, even if you're stupid, you can just invest under the 200, and over time you make money, because the line always approaches the 200. And then when it get wide enough from the 200 up here, then you just sell. Now, there are exceptions, right? An exception is a business that is doing bad, right? If the business go out of business, it's not going to meet the 200. It's going to go to zero, right? Or if they're in a horrible financial situation, it'll just get closer and closer and closer and closer to zero, right? And it'll never hit the 200 unless their financial situation improves. But like, look, this is just speaking in general. Outside of exceptions, this is proof that you can time the market. You can just look at the 200. Now, this is not an absolute rule, but on average, this is the rule. So anybody saying you can not time the market, you can time the market. And this is not the only way to time the market. I was just showing one because I'm looking at it and I can see it and I can show it to you easily. See, every time it's below the 200, we go down. Above the 200 right here, it went up. Like, it's just what it does. Oh, you can't time the market? The data says otherwise. Yes, you can. I'm tired of people saying that you can't time the market. Yes, you can. Yes, you can. Yes, you can. And also, this is another way to time the market. This is absolute. The powers that be cheat in the stock market. If you know they're cheating, you know that there's a pattern. Because like criminals, they have a pattern to their criminology, right? So if they have a pattern, you can predict the pattern. And if you can predict the pattern, you can predict the stock. You can predict the time because you know the pattern. So there's multiple ways you can time the market. You can time it by what criminals do if you can catch them cheating. You can time it by the 200, and this is generally speaking. Like, this is not absolute, right? But over time, this averages out to timing the market. It just goes up and goes down, right? So there's multiple ways to time the market. And this is why when I make these predictions, I'm right so many times, because I'm aware of the fact that you can predict the market. So if you can predict the market, all you got to do is figure out how to predict it. So my focus is like the people that say you can't, they have no baseline. So they're not even looking to time in the first place. See, I'm looking to time, and so I can time it because I'm looking to time it. They can't time it because they're not looking to time it. They have no frame of reference. I have a frame of reference. I think that is all I have to say for now. I'm at the 50-minute mark. I'll be honest. Really, I'd like to get to an hour. Have an hour stream. So what I'm gonna do? I'm probably going to chill for like 10 minutes. I might say some stuff, but I'll be thinking about something. I'm gonna try to think about something to say, right? Yeah, my throat got dry, so I had to get some water. But yeah, let's go back up to AMC, right? Refresh this. Yahoo being silly. Bro. I guess I should recap a bunch of stuff. Because I want to fill the space with some words, right? I don't want to just be dead air. I said this before, so this is just a little bit of recapping. I mostly deal with penny stocks. Just recently, I started dealing with meme stocks, right? Well, recently, I mean like 2 years ago, right? Really a little bit more than that because I went on stream. I don't believe, but I shouldn't say recently. In comparison to my total history of dealing with the stock market, it's recent, right? And it's becoming not recent because time is passing. But at the beginning, I should say it this way because time is changing. At the beginning, I was focused mainly on penny stocks, right? I did the absolute opposite of what everybody claimed not to do, right? They said, don't go into penny stocks, you're not going to make money. Okay, I did that. And not only did I do that, I day traded on top of that, right? And I'm positive, right? And I've been trading stocks since 2019, right? And I'm up. That doesn't mean like I haven't made mistakes. I made some big mistakes, and I made some really big mistakes on AMC because instead of listening to myself, who is correct on the stock, I started listening to other people, and by other people I mean everybody. It's not just one individual. I'm like, okay, let me listen to what they say. Maybe they have something they can add. And so far, everybody else hasn't added anything to make me money. Like I've been the most accurate on the stock from what I can tell, from what I've seen of looking at other and I know this sounds arrogant, right? But I predicted where the stock is going to go. Nobody else predicted it, right? Not that I can see. Show me another person that said the stock is going to go down to $1. Nobody said that but me. I'm the only person. I'm the only person that said that. So I made some big mistakes because instead of listening to myself, I started looking and listening to other people. I should have just listened to myself, and then I wouldn't have made the mistakes. But that's okay. We learn. So instead of going and looking at a bunch of other people, I'm just going to go back and look at my own stream because my own stream has been correct. Yeah, now this is subject to change. When I start being incorrect, then we'll change back like, hey, maybe it's time for me to start listening to some other people. But until I'm incorrect, I'm not going to listen to them. And that's not originally what I wanted to say. what I was going to say is when I started day trading in penny stocks, right? Day one, I was day trading and I was doing penny stocks. And by penny stocks, look, the Wall Street, they call a penny stock anywhere from 1 cent to $15. When I say penny stock, I mean pennies. I was looking at stuff at 30 cents or below. When I say penny stock, I mean pennies. It was 30 cents or below. And I traded that consistently to about from 2019 to 2022, maybe a little bit longer. But yeah, I was consistently in penny stocks, like exclusively, right? I've kind of branched out. So I branched out to meme stocks, AMC, GME. And I have not branched out to, just the main safe stocks, right? I tell other people about them, not on stream, right? But for people that want to be safe, I tell them about them, but I don't give them, I give them a little bit of information just because I've been around stocks in general, but I don't give them very in-depth detail about stocks that are not penny stocks or meme stocks, right? But what I was doing, this worked for me, right? It doesn't work for everybody, right? So I can't tell you it's going to work for you. But most people trade on the 200. Like in penny stocks, I was trading on the 10-day average. Yeah, this blue line, I would trade on the 10-day average, right? And this is very general, because I have a lot of exceptions, right? But generally speaking, like when I got advanced at it, like I would look at the 10-day average, right? And I would look for, this is the 58-day average. I would look for when the 50-day crossed the 10-day. And I'm like, oh, this looked like an ideal time, right? So when the 10 crossed the 50, and you can see right here, it looks like it goes up, just generally speaking, right? So that's what I was doing. And I should have stuck to this. Like as I got more advanced, I was learning, right? So to learn, I had to listen to other people. So that kind of messed up my trading because I wasn't listening to nobody. Then I listened to other people, and I had to do trial and error to figure out what works for me, right? So that made me temporarily go down because I was learning. But yeah, my first 2 or 3 years of trading stock, I ain't listen to nobody. I was like, look, I'm gonna do what I want to do, right? And it worked out. Like, believe it or not, it just worked out. And I got proof of this too, right? I got proof of this working, right? Like, it's not on my YouTube, but I got other stuff, right? I can prove it if need be, but I don't want to connect all my accounts, right? But I do have proof of me going, and I do what I do, and it just works. Or at least it worked up until this point. I can't say it's gonna work in the future, but it worked in the past. Up until this point, it's worked. So. But yeah, also on penny stocks, when I got in, like penny stocks, they were moving a lot more in a day. It was actually pretty nice in 2019. I ain't gonna lie. Cause like what I look for also, because at first I wasn't even looking at this line. I didn't learn about these lines until way later. When I first got into stocks, I would look for one thing and one thing only. The only thing I would look for was volatility. And when I got in at 2019, penny stocks were very volatile, right? I don't see as many volatile stocks now. Like I would see like a penny stock, it'd be like a zigzag, right? And I was looking at 30 cents. So it'd be 25, 35, 25, 27, like 20, 31. This'll be all in one day. And especially in 3 days, right? So I'm like, this is great, bro. Like it's being volatile like this. I could just trade in, trade out, trade in, trade out, right? It was amazing. And that only happened for like a year or two, like a year, maybe 2 years. Like penny stocks was crazy, right? And then they slowed down. And as they slowed down, I've had to adapt to that, and that's been kind of bad for me, right? Because I I had to learn. I've learned a lot of stuff, and I had to look, and I had to wait. I'm not a patient person, right? Like in an impatient market, because I'm not a patient person, I was doing amazing, right? So I've been doing a little bit worse. I gotta be honest with you. My predictions have been on point for AMC, but trading penny stocks in general, because they slowed down, that kind of hurt me, right? So I want to have like full disclosure here, right? So it ain't like I just make money all the time. But like my predictions are separate from, because a lot of things I do are risky. Like what I tell people on stream is the stuff I have the most confidence in. Like there's a lot of stuff I don't have confidence in, and I just do it anyway. I'm like, all right, let's take this risk, let's learn, let's find out. I do stuff for learning purposes, and some things I do because it's a gut feeling. Yeah, but the stuff I say on stream, that's the stuff I have high confidence over, right? And that's why it's more accurate. So there's a little bit of discrepancy. That's a hard word to say. Discrepancy between all my predictions on stream and everything I do offline, because some things, it's not, I do more than just what I say on stream, right? A lot more. But that's also how I learn. So, you know, I can't forego the process of taking the risk. Or I could, but, you know, I wouldn't know as much. And I think ultimately, I think that outweighs the penalties. I hope it does. And maybe I should just stick with what I know. I don't know. But yeah, that's pretty much all I gotta say for right now. We at the hour mark. Yeah, we're at the hour mark, and I haven't been streaming. When I started streaming like constantly, I got better at speaking. Like I stumble over my words a lot. Because I think too fast for what I'm about to say. But when I stream regularly, then I don't stumble over my words as much. So I guess I need to start back streaming just for that. And I'm not streaming Marvel vs. Capcom 3, so I need to fill the space. I need some content. So whatever. I think I'm going to start streaming the stock market more often. Probably a lot more. I don't know how much. I haven't decided that yet. But yeah, I will be playing more games too on stream. The next game I'm gonna play is probably Final Fantasy VI. I'm gonna play Final Fantasy VI on stream. I don't know when, but yeah. This is a treat for all you that watch my stream for video game content. If you watch to the end, you know the next game I'm gonna play, which is Final Fantasy VI. I never played it. I heard good things about it. Let's hope it lives up to the good things. Because unlike other people, I'm not gonna say it's good just 'cause if I think it's bad, then I'm gonna say it's bad, right? I'm gonna beat the game though. Unless it's unbearable. If it's unbearable, I stop, right? But I don't think it's going to be unbearable. But yeah, I hope it's good. People say it's good. I'm going to try it out. And yeah, we're going to go from there. So that's the next game I'm playing. And that's, I guess that's pretty much it. So I am going to close the stream out. I'm gonna give my outro and we're going to be done. This is Jabroga. Thank y'all for watching. You've been watching me speak about AMC, GME, meme stocks, and stock market analysis. And I will see you next time.